I'm Andy Edstrom, Managing Director of Swan Advisor Services and author of Why Buy Bitcoin. And I'm very excited to moderate this panel, which we have titled Not Financial Advice, Bitcoin's Role in a Hawkish World. Probably should have used a stronger word than hawkish, given what's going on these days. We're going to get an update on Bitcoin adoption in the institutional investment world from these great panelists. Morgen Rochard is the owner and lead financial planner of her fee-only registered investment advisory firm, Origin Wealth Advisors. She's also a financial consultant at her firm, Money Owners, author of the Personal Finance Quick Start Guide, which I highly recommend, and co-host of the Bitcoin for Advisors podcast. She's a CFA and CFP credential holder as well. All right, James has over 2 decades of institutional investing and risk management experience, mainly in hedge funds and private equity. He went to Yale. He studied fintech at Cornell. He's a CFA charter holder. And these days, his passion is for teaching fundamentals of finance, including through Bitcoin, through his newsletter, The Informationalist, and his online platform, Looking Glass Education. All right, David Thayer is an executive advisor to Blackstone. He used to be a partner at Blackstone, the world's largest private equity fund, until he dropped that role a few months ago. He had founded an energy investment firm, which was acquired by Blackstone. And just to round out his normie credentials, he has degrees from Wharton, LSE, and the University of Chicago. All right. So notwithstanding the formal introductions, I'd like you each to talk just for a couple minutes about your TradFi experience and how it brought you to Bitcoin. Morgen, take us away.
I'm up. All right, so my registered investment advisory firm is 8 years old now. Prior to starting Origin Wealth Advisors, I was actually a day trader. I started on the floor of the American Stock Exchange getting guys yelling in pits, coffees, and then became one of those guys yelling in a pit as well, and was moved to an upstairs office, got to see fast money at its finest, and then the firm had some issues, and I moved over to the sell side, which was a big deal at the time, going from buy side to sell side, and going into a private wealth firm, just a small one, Merrill Lynch, where I traded very complex products for ultra high net worth investors. And really, much to my dismay, got to see what goes on behind the scenes of private wealth management. Knew I liked what I was doing and just really didn't like where I was doing it. It seemed very obvious to me that I guess we would now call the term fiat, that wealth management had become a very fiat place to be, and that the advisors weren't really standing for clients anymore, and that it was an imperative to take my services elsewhere. In the meantime, also got involved in Bitcoin. I thankfully met my husband through Rothbard, which I thank God for every day. And we have been helping and educating people in Bitcoin for the last 10 years together. And I started advising clients on it in 2016 and have thankfully gotten almost all of my clients invested by 2020 in Bitcoin. So it's been a wild ride for me for sure.
James Lavish, you're up.
So some of you may know that in my first past life, I was a hockey player, ice hockey player. I did play at Yale, and I played a little bit professionally afterwards. And that didn't work out exactly the way I expected it to. Nothing does ever, right? So my senior year, I was trying out for, and I was drafted by the Boston Bruins. I got traded to the New York Rangers. I was trying out. I had a career-ending injury, and it was over like that. So not knowing exactly what I was going to do, and having gone to Yale and gotten a political science degree, completely useless in the real world, right? I decided to go into finance to pay off some of those student loans. Then I also worked on the floor of the New York Stock Exchange, trading some complex stuff called ADR arbitrage, trading foreign securities on the New York Stock Exchange. I ended up being picked up by a very large hedge fund down in Dallas, where I traded merger and risk arbitrage and did a lot of risk management, swaps, derivatives, all that stuff that you hear us talk about all day long now on FinTwit. And I was introduced to Bitcoin back in 2018. Now, the problem with this is that I was an institutional investor. And what do you do when you're an institutional investor and you learn about something new? Well, the first thing I thought was, I want to get out on the risk curve. I want to do something just a little bit different personally. This was not for my fund. This was just for me personally. I wanted to invest in something that was different. So I went and talked to the technology analysts on Wall Street. And what a fucking mistake that was. They told me without, bar none across the board, it's a Ponzi, it's worth nothing, it has no underlying value, avoid it at all costs. And thank God I did, because it was only at $3,500 then. The worst non-trade of my life. So enter 2020, we're in the pandemic. I'm unwinding from my current private equity hedge fund, and I'm leaving there. It was just, it was time to go. And my son, who's at Cornell, and he had done a lot of research, and his buddies were getting into this whole crypto space. And he said, "Dad, I think you ought to give this crypto another shot. I think you should look at Ethereum, look at Cardano and Solana and all that, you know."
Boo.
And so, boo. Well, this is an important part of the journey. And so I did, and it took me about 2 weeks of research and just legging in. That's what we call it on Wall Street, leg into a trade. I bought a little bit of each of them. It took me about 2 weeks, 2 Michael Saylor videos, and 1 Jeff Booth video to realize, holy shit, I'm in the wrong coin. So I quickly migrated everything to Bitcoin. Orange pilled my wife, orange pilled my sister, orange pilled my best friends in Las Vegas. And now I am, my mission for the rest of my career, which is why I call myself a reformed hedge fund manager, is to help further this ecosystem, this protocol, and to educate people about what's going on with money, why it's so problematic, and how Bitcoin can help fix all the problems that money, or many of the problems that money has.
All right. Thank you, James. David, probably the longest TradFi career on the panel here. Tell us how you found Bitcoin.
That's true, although it's also probably the most boring career on the panel. But I co-founded a hedge fund back in 2003, so about 20 years ago. That worked out reasonably well, and then a couple of years after that, co-founded the hedge fund where I now work, at least did until a couple of months ago. And really, because several of my colleagues there were also freedom-oriented, we were turned on to Bitcoin in 2011, and I'm probably the only guy in the entire room who knew about it in 2011, still hasn't made that much money on it. But in any event, it just seemed a little complicated to me to buy, and this is all at a personal level. And by the way, everything I say here is simply my personal opinion. It's not that of my firm. But nonetheless, didn't really get heavily into it until Alex Gladstein finally pushed me over the edge and said, "What are you doing, idiot?" He and I have been talking about it for a number of years, and in 2020, I finally took the plunge, and the more I learn, the more I'm convinced that it, as James just said, solves a multitude of problems, only a subset of which are financial at all. I think it really solves a whole host of social problems as well, even moral problems, as Robert Breedlove has mentioned earlier today.
Thank you, David. Okay, so the thing I like about this group is they all have TradFi backgrounds, but different segments of TradFi. So I'm going to start with the financial advisors segment, near and dear to my heart. Having just launched Swan Advisor Services, which is the only way for financial advisors to buy actual Bitcoin on behalf of their clients. That's Bitcoin only. But Morgen, this is your business, financial advisory, and you've been in Bitcoin for close to a decade now. What are some of the lessons and conclusions you've drawn about Bitcoin and how it fits into your financial advisory practice?
So, like it's been said before here, but Bitcoin is a savings technology. So to me, that means that clients no longer are forced into investment beyond their risk tolerance as quickly as possible. As we all know, financial advisors have made their way in the world by telling clients that they don't know how to invest, that they're not savvy enough to do it themselves, that it takes time, energy, talent, and effort to do so. And actually, in fact, all of that is true. The average person is not very good at investing. The above average person is not very good at investing. And the above average person is also not very good at investing. And so, therefore, we do actually need to deploy our capital as quickly as possible because our money is being consistently debased by our government. And we've been told over and over and over again that we are not supposed to hold cash, that we are not supposed to save money, that we are supposed to be in a world where we either consume as quickly as possible or invest as quickly as possible. And I think that it is my job and the job of many financial advisors to get out there and show people that that is just simply not true, that there is a savings technology out there that enables you to save money for a long period of time, and you don't have to spend all of your time, energy, and talent outside of what you do for a living and your family and everything else that you want to do, making sure that your finances are perfect and safe.
Well said, Morgan. All right, I'm going to flip over to David now. So you are now an emeritus partner at Blackstone, which is probably the world's most successful private equity fund. Some of the smartest investors in the world on staff there. What are your colleagues and or former colleagues and contacts in the industry thinking about Bitcoin these days, considering the recent market ructions?
Well, to answer the first part of your question, I don't think they actually think about it that much. I mean, they are successful in the paradigm in which they've been operating for any number of decades, and so they don't stop to think of questions about, what is money and things of that nature. And furthermore, I would just say that I think there's a general ignorance. It's probably too strong a word, but nonetheless, I'll use it as to what Bitcoin's current use cases are. I think to the extent there's a perception at all, it's one of speculation. Worst case, hey, isn't that what's used by narco terrorists and drug dealers, and of course cash is too. But there are current use cases most people here know. I mean, the payment rails use case, the transfer payment use case. There's even a emergent social media use case. And I think that's largely missed on just about everybody in TradFi. And so that I find really exciting, in addition to, over and above, the larger issues with which we're all well acquainted when it comes to hard money and alternatives to fiat.
Okay, and I'm going to follow up. How about from the energy framing, right? You built an energy fund that was acquired by Blackstone. Are your colleagues in the energy investing space a little farther up the curve on Bitcoin?
Well, we invest in midstream, which is pipeline, storage assets, energy infrastructure. But really, where that action is taking place is in the upstream space. And I have found through other conversations, for instance, in a chat group with a guy named Alex Epstein, who I think is here somewhere, who's written an excellent book recently called Fossil Future. But nonetheless, those guys are pretty plugged in, as are smart politicians like Chip Roy, and especially those from Texas, as Chip is, as to the use cases upstream. And so, of course, that relates to grid security, load balancing, taking advantage of flared gas, which is worth, as Michael Saylor said yesterday, 0 or perhaps even less than that. So if miners are willing to kind of take that off people's hands, it's not only good for the environment, it's good for the energy industry and society in general. So those guys I do think are more entrepreneurial, and perhaps not surprisingly, given that it's a more entrepreneurial industry.
All right. Well said. James Lavish. We were supposed to stay humble and stack sats, but this bear market has claimed some heads, including in institutional land, even in institutional Bitcoin land, right? NYDIG. There's been Genesis. Obviously, everybody knows what's going on this week in crypto land. So the institutional thesis, delayed, busted. Where are we?
cleaned out. So, and I don't mean in a negative sense. I mean in a very positive sense. We talked about it this morning on the Swan stage outside. Look, this is a healthy thing for the market. One of the things that this reminds me of, this whole FTX thing, is it reminds me of 1998 when long-term capital management, with its geniuses who created the Black-Scholes model, and these guys were they won Nobel Prizes for this. They were so arrogant, and their models were so troubled. They only back tested them 6 years, okay, and then they levered up their portfolios on short volatility trades. And all that means is that if the market moves quite a bit, they lose a lot of money. And so the problem was they were so over-levered that they collapsed, and the Fed had to bail them out. It literally had to fail out long-term capital management and Goldman Sachs before the entire financial industry collapsed. And you guys both remember this. I mean, this was a major, major event in my career. Okay, so what I see today is a very similar thing happening with FTX and Celsius and something like some of these creations that are highly levered. They got wiped out. They're getting wiped out. And the good thing is that there's no Fed to step in and save them. They're gone. That's it. So it's a really healthy thing for the market. Now, again, going back to what David was saying, is that look, institutional investors, they've done so well in this fiat world. They're entrenched in this world, and they're entrenched in it. It's very difficult for them to think outside that box. There's no incentive for them to think outside the box. They've made so much money thinking inside the fiat box, and that's where they live. Why do you think Jamie Dimon is out there every day talking badly about Bitcoin and Ethereum? Bitcoin will blow up his model. I mean, how do you think he's going to make his fees if the Bitcoin fees on that second layer are an absolute fraction of that? So to answer your question, Andy, it's coming. This is a wake-up call for everybody. This entire, not this week, but this entire year is a wake-up call for everybody. The Fed's models are broken, right? You can't do the same thing that long-term capital management did on Bitcoin, and you can't. And if you're doing it on the garbage out there, you're going to get wiped out. So I think it's a healthy thing, and the industry will just grow in a positive way from this.
James, would you say all their models were destroyed? Some of them were destroyed.
Some of them are destroyed.
So actually, I have a question. So James, do you think, and Morgan as well, that Bitcoin will be smeared with the crypto rush?
Yeah, absolutely. The mainstream media is going right after him. I'm sorry, go ahead. Yeah.
Sorry, I didn't mean to interrupt you. No, it always is. You can already see what's going on Twitter, and it seems obvious to me that now any positive outcomes that could have gone through Congress and Senate and so forth here in America are probably going to be sideshelled. And I would imagine now that exchanges are going to be facing some serious regulatory headwinds.
Pain ahead, friends. That's why we take a long-term view. So Morgan, you framed Bitcoin in your practice as savings technology. Some other framings include uncorrelated growth asset, insurance policy against the financial system falling apart. Are these framings that appeal to you? Are they still relevant? What do you think about those kinds of framings?
I mean, I'm a true Bitcoiner at heart, so I don't often like to use those framings, but again, when you're speaking to clients who need this desperately in their portfolios and they're willing to hear something like inflation hedge or uncorrelated asset, right? It's kind of like, it's like you're a little bit of a snake oil salesman when you say those kinds of things, but it's not that it's not true, right? If you look out on a long enough time period, and Bitcoin has been an inflation hedge. Inflation is printing 8% currently, right? As far as we know, 8%. That's simply probably not accurate, right? I think anyone could attest to it that inflation tends to be personal, and that your inflation rate can probably be somewhere between 2 and 30% on any given year, depending on what category that you're going for. But if you look back at a long enough time period, Bitcoin has actually protected you against that. So as far as it being an inflation hedge, it is actually a good one for your portfolio. As far as it being insurance, I think it's better insurance than the average insurance that you're going to get. I don't know about you guys, but I don't get a whole lot out of my insurance policy. I find myself paying things out of pocket all the time. And this one for sure will protect me against everything governments are doing in the future. So, I mean, yeah, for sure it's it's an insurance policy. But truly what it is, right, is it's savings. And I think the problem is that we don't really know what savings is because we haven't done it in so long. So I think whatever narrative you need to get your clients involved is the good one to use.
Love to hear it. What other narratives, gentlemen? I'm gonna give David and I'm gonna give James a shot at this. I mean, what narratives do you think now, given what's gone on, are still resonating with institutional investors, if any?
Well, we talked again this morning. We talked about the fact that so much of the assets under management in this world are controlled by just a handful of firms. Right? You've got 5 firms that control $30 trillion worth of wealth. Okay, so you've got like BlackRock, Vanguard, Fidelity, State Street, and Morgan Stanley that they control $30 trillion. But they're opening up to allow investors to buy Bitcoin. Why? Because the individuals are asking for it. And so it's going to happen. Grassroots individual investors are going to demand it, and they're going to have to do it. And that starts that wave that everybody's talking about. Because if those 5 firms, if they just take a 1% to 3% position in Bitcoin, I mean, that's going to send this price well up over $250,000, $500,000. And there's trading friction, so the amount of money that comes in doesn't really correlate to the price will move more than that. Okay, so but they're going to be forced by their individual investors to open up and allow them to do this. Number one, you've seen it in Fidelity, you're seeing it in BlackRock. Number two, once they do it, what do you think the rest of the firms in the world are going to do? They're going to jump right in and have to match it. Because if you have one set of firms that are keyed in on this savings technology, then you're going to have to follow that, or you're going to fall behind.
Okay, David, I just want to put a little spin on this. Wind back the clock a few months. You're pitching Bitcoin in the investment committee to your Blackstone partners. What's the pitch, and has it changed?
Yeah, I think actually I would harken back to what I had earlier said. I would focus on the current use cases, and especially the social good that it's doing in developing countries. It's not just some speculative asset. I think people in the room understand that it's an alternative and has promise going forward. But right now, it has real use economically and socially.
Thank you, David. And final word, Morgan.
I'm going to do a shameless plug for my book here. If you'd like to get a signed copy of the Personal Finance Quick Start Guide, please find me after. I'm selling them for 125,000 sats on Lightning. I'm also writing a Bitcoin personal finance book. If you think you should be interviewed for that book, I'd love to hear your story.
Thank you, Morgan. Thank you, James. Thank you, David.
Thank you.